Mohammed was talking about maybe more hot inflation prints in our future. Every time we get one, the Federal Reserve calls it a bump in the road. How many more bumps until they're no longer just bumps?
Yeah, that was in fact the title of our letter last week. And we should expect more bumps along the road. And I think we're seeing the different factors that are contributing to inflation changing, though. During COVID, we had everything going into the inflation numbers, whether it was oil, whether it was commodities, everything was going up at the same time. What we're seeing today is very different in the sense that, for example, oil prices are going up. And we could argue that they could just as easily, if the Middle East tensions came down, there would be the oil prices coming down with them. But that's why we do think that the road will be bumpy, because those kinds of geopolitical events are things that you cannot plan for. And at the same time, a lot of the supply chain issues that did contribute broadly to the markets have disappeared. So I would not assume that inflation numbers would be super sticky, but they would certainly be bumpy.
Afsaneh, one thing that we've been talking a lot about this morning in the past couple of weeks has been, it's not just oil prices, it's also copper, it's also iron ore, it's also a whole host of other commodities that are really being driven, what a lot of people say, is by demand, which isn't necessarily something that is as transitory. How are you playing that or understanding that in your investment thesis?
So there is factors like copper. We're seeing, for example, Chinese demand growth because they're starting to produce more EV cars. And we had Janet Yellen there talking to them, and the Europeans concerned that they're dumping the markets with EV cars. Now, that's a positive force, getting more electric cars into the markets. And that will continue, that force will continue and push certain kinds of commodity prices with them. And we will continue to see that. But I think we are seeing some short-term impacts, for example, specifically on copper that we've seen. The other impacts that we're seeing on things like gold, which are completely different. And I think the biggest force there is central banks trying to diversify their sources of reserves, post what happened to Russia a couple of years ago when their reserves got frozen. So you're seeing gold become a store of value for the central banks that are trying to have, particularly in China, Russia, and some other emerging markets, as a source of their reserves.
We heard that for a second time now this morning. Mohammed El-Arian had a similar point. But to the commodities, copper, Citi says, is entering a new bull market phase. But the whole story in China is that the property market is still deteriorating. When you look at EVs, those are things like cobalt and lithium. Why do we see the entire commodity spectrum going higher, even though the stories are different coming out of China?
I think what we're seeing is in the factors that in China you have, interestingly, not been able to necessarily generate profits from the production and the manufacturing of certain goods, but at the same time there are certain political forces and market forces and forces in their companies to produce more goods for the green economy. And by the way, it's not just in China. You're seeing that in India. You're seeing that in parts of Latin America. Of course, in the U.S., huge forces going in that direction. So it's not just a Chinese factor. And I think we will continue to see these forces. But let's not forget, there are also, at the same time as the demand is going up for these goods, there is supplies that are being found in places like in Norway. Now, it's a long delay to get some of these supplies into the markets, but no question that the supplies will also start dampening things in the longer run. In the shorter run, we will see these bumpy ups and downs.
Afsaneh, how much more does the gold trade have to run, given the fact that this diversification story potentially has legs?
I think this diversification story will continue. I think we have gone through this. If we look over the last, 50, 100 years in terms of the place of gold in central bank reserves, it has gone up and down through time. And at times where people were less certain about certain political factors, you have seen the place of gold become, gold taking a much bigger share. I think right now what we're seeing is more of a medium-term impact. There's more central banks that will be continuing to add to their reserves, but it's not like a major, and some retail will follow that probably, but it's not like a major change in the value of gold. Let's not forget, gold does not generate returns beyond its asset value, but it doesn't have a rate, attached to it. So I don't think it will be a very long-term impact.